Hello and welcome to FX Addicts Weekly Market Analysis. This is Tim, the Currency Professor, and today is Friday, April 5th, 2013. As a reminder to everyone, a week from Monday, that's the 15th, through the 19th, we have FX Addicts is sponsoring its very popular Forex Scalping class. There are still a few spaces available. We have not done any advertising on it, so we're trying to keep it fairly small. So seating is limited. Feel free to hit our website and check out the class schedule and the course description as well. You can just click on courses, or you can click on the calendar, see time and everything, and that'll give you time in your local time zone. Also, it is 3 p.m. Eastern Standard Time, U.S. So you'll have to do the adjusting for that, or look on the calendar. Big week this week. Bank of Japan, as expected, did some movement. They moved up their quantitative easing quite a bit, and they've actually doubled the size of it. So very, very big deal. The yen yesterday dropping substantially against most currencies, and again today. So we're well on our way now to a pretty decent move again in the yen. Also today, in the U.S., the non-farm payrolls came out, as well as the employment situation, and very big disappointment there. 88,000 for non-farm payrolls. However, digging a little deeper into the report, last month's number was revised higher quite a bit to 268,000. And the report on the surface looked bad from the non-farm payroll standpoint, but underneath and throughout the whole report, it was actually a pretty decent report. The unemployment rate dropped to 7.6%, and the broader U6, which includes discouraged workers, dropped a whole 0.5% from 14.3 to 13.8%. So that's a pretty big deal. Construction jobs also were up 18,000. And then some leading indicators in the employment report. Temporary jobs posted an increase of 20,000. That's usually an indication that full-time jobs will pick up in the future. And then also the long-term employed dropped 203,000 to its lowest level since March of 2011. So on the surface, just if you look at the non-farm payroll number, it wasn't good. But underneath the hood, it was actually a fairly decent report. So today's movements quite large. Could be reversed here as time goes on. So let's get to the numbers. Euro US dollar up about 80 pips right now, back up above 130. We're starting to form a pretty nice U bottom here, and if we can break out above this in the next week, and actually we would need to close above this area at some point soon as we move higher. So about 130, 150 area, if we closed up there, that would signal that we've kind of gotten a bottom in here. And when we look at the pound dollar also, we got kind of a similar situation, although the pound's a little ahead. If we look on the weeklies here, we can see how this week we're closing up above last week's highs, or just about last week's highs. So it looks very positive from a weekly standpoint also. Much needed correction here after many weeks down. And on the monthlies, well, we are turning around here. Now, when we stopped here, we really shouldn't have stopped there. Technically, there was nothing to say that we should stop at that point. We should have ran all the way up to the 142, 144 area, and we did not. So this could be that move where we take out these highs and try to make it up to that upper range. Now that's a long shot at this point, but you never know, it can do it. There's certainly a lot of bearishness fundamentally on Europe in general. They're not doing very good. Their economic numbers have not been very good. That being said, though, there's a lot of dollar bashing. In other words, everyone's hitting the dollar again, and as we've seen in the past, that can be a dangerous thing to do. So this could turn around very quickly as well. Now looking at the British pound, up quite a bit the last couple of days. Up 111 right now, 153. We're over 153 here, and we do have this kind of V bottom in here, very much like we have in the euro against the dollar. But here we've actually done it over a longer period of time, and it was certainly a precursor to the euro US dollar. So now that we've broken out above this point here, and we're above this channel line significantly, we're probably going to move quite a bit higher. Now if we look on the weeklies, we can see here we're going to run into some resistance right here at this point, and then the next resistance will be up here at this trend line, which is about 157. So we could really run on this move here, run right back up to where we were before we broke down on this trend. And on the monthlies, well, here we're not getting real confirmation. We would actually have to end the month up around 158.50 in order to turn this market around. This is really not an indication at all where we're at this point. If we were to close at this point, that this market is turned around. For the month, we would need to close above this trend line, and we would need to close about 158.50. That's a very, very long shot at this point. There's a lot of economic things and fundamental things that could make a very good case for that not to happen. So we're just probably seeing a lot of profit taking and some good knee-jerk technicals here for it to go up a little bit, and then it could come down just as quickly, if not faster, than we went up. US dollar against the Swiss down for the third day in a row, quite a bit, down about 70 pips, back down close to the 93 level. Looks like we could probably sell off a little more here, get down to about the low 90s again, get down to this lower trend line. We were hoping that it would break out this month, and it has not. Now let's look at the weeklies. We've been in this trading range now for about 5-6 weeks, and that's still a stable range. So if we can hold here and then run back up, it's still a fairly decent pattern. Now on the monthlies, we're not doing so well on the monthlies here. If we were to close at this point, it wouldn't be great. So we're really looking for it to get up and make new highs. Now of course we're only 1 week into the month, so a lot can happen still. We would really want to see this thing close up around the 97.50, 98 area, which is around this trend line. That would be very positive, and that would really move this market higher. Now longer term, that's probably where we're heading. Shorter term here though, we could fall back a little bit, and it's mainly due to the strength of the euro. Let's move on to the exciting stuff here, which is the US dollar against the US dollar against the Japanese yen. Up 132 right now. We're up over 300 pips yesterday. Big move, very big move here. Rocketing up. We're pushing on that 98 level that we've talked about for so long, and pushing up very strongly. We will probably continue. We should be at 100 by the end of next week, if not sooner. We could get up to about the 101 area actually by the end of next week. There's now a lot of enthusiasm. We know that the Bank of Japan is going to force this market higher, the yen much lower. And we look here on the monthlies, boy, we're just doing great for being 5 days into the month, and we could continue this rally up quite a bit for the month. We could be up substantially for the month. So a lot can happen still, and there's certainly a lot more room for us to move here on a monthly basis. Euro Swiss continuing to leak lower, down 16 today, 121.40 area, just very, very weak, pulling back quite a bit. Swiss National Bank kind of stepping aside here and not really enforcing the matter at all, letting it fall back, and at some point they'll step in there again. They usually do. Now longer term, if we look in the weeklies here, we can see how we're starting to get back down into that trading range just above the 120 area, and that's where all the action took place the last time. So we get down into that area very, very easily. We could see a pop up. We could see the Swiss National Bank step in there and support it. Euro yen, also big moves. Yesterday up 500, over 500 pips. Today up 250. just rocketing up. We are now very, very close here to making some new highs in this move. We look at the weeklies, looks very, very strong. Rocketing up, we could probably be at the 130 level here, quite possibly by the end of next week, and maybe even 132. There's really nothing holding it back at this point, and we close up at this level on the weekly basis. And we look at the monthlies here, we can see how we're very close to getting above that. So by the end of this month, would not be surprising to see us up around the 138 level. So very, very strong there. And we got two things working in our favor on this one, the euro being stronger and the yen being weaker. So this has a much greater potential for much larger moves, and we've seen it in both directions. You know, the daily range is nothing for 500-point day swings, and we saw that yesterday, and we've seen it many times in the last few months. So very, very volatile market, but certainly if you're long in there and you can withstand that type of volatility, it's a great market to play. So that is it for today, or for this week. Hope you all have a good weekend, and please stop on by FX Addicts if you haven't already. Become a member, try us out for 7 days for free, and by all means check into our class. We still have seats available for a week from Monday, and would love to see you there. Thank you.